We've got a lot of things to talk about on this week's Cattle Call. It appears that our streak has ended when it comes to higher and higher markets for cash cattle. We'll talk about that and more, talk about demand implications and what the focus is for this week's cash cattle market. And of course, I'm Chad Moyer. This is Cattle Call, brought to you by the Nebraska Rural Radio Association and Wolf Auto, small town strong. Again, joining me on today's program, it's Brad Kooima from Kooima, Kooima and Varilek at Sioux Center, Iowa. Let's start, first of all, with the cattle on feed report from last week. Were there any, I know it's not the big one where we get a look at some of the percentages and things like that, but just quickly, any takeaways from the cattle on feed report on Friday?
Absolutely. First, thanks for having me on, Chad. I appreciate it. The cattle on feed report was neutral, marketing neutral on feed, and the placement number was a little bit friendly, 92 compared to 95%. The placement number, again, driven by what's going on because of the border closure. This was the 7th consecutive month of record low placements for the state of Texas. It's a big deal. You know, last year we imported 1.1 million, a few more than that, cattle out of Mexico, and now it's the same as nothing, that little trickle that came in until they shut it again. So that certainly is a big factor when it comes to the inventory down there. I didn't see anything else that was particularly dramatic. You're right, it's not a quarterly, so we don't get that breakdown of heifers as a percentage of steers. It'll be interesting to see that as we go further into the summer, and especially that July inventory report.
All right. Some of the other news, just quickly, the cash cattle trade that we did see last week. I mentioned it in the intro. It does look like our streak has ended. We did break just a little bit lower last week. Any thoughts on where we ended? Again, wide ranges, but it felt like there was just a little bit of pressure in the cash market last week, huh?
Right. And I think anybody that's honest felt that the softening of the market as we went through the week. The South, for a change, really caught up and really showed some great leadership, and the North wasn't able to really do much to capitalize on that. Just my local experience here where I was getting bid, there was some 238 on Wednesday, 37 on Thursday, and then 235 if you could get it on Friday. And of course, the week before we sold cattle at 242. At least in my backyard. So you're right about wide ranges of trade all over the place. But it feels to me like the market has shifted a little bit, and I don't want to pretend like I'm some expert or alarm anybody here, but often when the market starts to tip over, right? If you haven't got in on this big price, let's say you're a calf feeder and you haven't got in on any of these record prices before, you're going like, well, I don't want to miss this deal. Look at what the basis is doing. Look at what a discount that the futures are. So if I'm hedged, I've got more incentive to sell. I just worry that we're in a spell here for a minute where we're going to see this cash market soften up. I don't know that's going to last forever, but it feels to me like, the trend is your friend, and we're starting to tip it over here a little bit. So I'd be extra careful. And I think we're nice and curt in the North, and that should cushion any kind of, big break. But these are record prices. I mean, remember how good you felt the first time you heard 235 was bid? You shouldn't feel so bad just because it's a little lower than it was before.
All right. We'll come around and talk about how that might be influencing this week's cash trade here in just a moment. But let's go ahead and get to some viewer and listener questions. Again, thank you so much for watching these and following along and submitting those questions. Here's a question that has to do with, here's a risk management question. And this one comes from before the internet. And this is the theory of when you sell something, you buy something, or when you buy something, you sell something. It's taking the opposite position. What do you think of a management style like this, and is it applicable to what's going on today, Brad?
Well, it's a bit of a sentimental question for me, even, Chad. Before the internet, wow, we're talking about is this? I'm the old timer. I think.
I'm old enough to remember party lines, so that puts me in a specific place in history too. So
yeah, me too. Yeah, we had that one neighbor that always pick it up too and listen in on us, right?
Yeah.
Anyway, so my dad was a pioneer shipper. That means that he sold cattle to the Sioux City stockyards for 50 consecutive years back in the good old days when you had true price discovery, right? And as I was a kid growing up, and he was the one that said when I was 16 years old, that was in 1974, I was old enough to feed a pen of cattle with him. So yeah, I'm 50 years deep into this cattle feeding, I guess. But he would tell me too, he said, if you're selling fat cattle here and they're a loss and they're, the market's low, be sure to hurry up and get back in and get some of these feeder cattle bought cheap, because the market's cyclical, right? We go down, we come back up, and I think that worked pretty good for that generation. But I have to be honest, as I've gone through ebb and flow of the markets, and markets change, and if you don't change with them, even if you're going the right direction but you're standing still, right, you get run over. I can personally show you my scar. The third week of May of 2015 until December of 2016, 17 straight months, were the cattle that I fed. And I've kind of got cattle around all the time without any hedge money. There wasn't a single group there that made any money, not one. 17 straight months. So this strategy of sell it and then quick buy it back as quick as you can didn't work at all in that environment. Now things have changed a lot because of the futures market too. You're incentivized by, right now, people can't wait. They're going to miss something. Feeder cattle are really high, in my opinion, especially compared to where the futures are. So I understand generally where this listener's question is coming from, but I'm afraid that the good old days where you just buy it and know the next round is going to work isn't necessarily so. And a lot of that, unfortunately, Chad, is because of the unexpected. That's the things that we're worried about right now, right? The black swan, the geopolitical events that create differences in the market that have very little to do with actual supply or demand of the actual cattle.
Yeah. So if that's the case, if this theory or this idea doesn't necessarily work, and I know we could do an oration on this, but what has to be added to the risk management plan in order for it to work, or for you to attempt to protect yourself? You know what I mean?
You're right. We could spend a weekend of seminar on this one, because you're diving into something that's very, very complicated and something that brokers don't even like to talk about, right? Okay, so let's say, some brokers anyway. So let's say you're a pure hedger, okay? Market rallied, you got a chance to hedge $75 a head profit, and you did it, okay? Well, some of the non-hedgers are making $600 a head profit. So now you're going to turn around and you're going to lose that whole margin. You're going to turn around and buy a break even that's clear up in the rafters. And what are your odds you're going to be able to make $75 on that? Not very good, So you have to come up with, in my opinion, some strategies that are a little more broad thinking, and being able to be a little bit, while they need to be disciplined, you need to be a little creative. I mean, I've been a big buy puts and stay bullish guy for a long while in here. Make sure you got something covered against a black swan type event by having some put options. If you like LRPs, I'm not fond of them. We sell them here, but they have their place, I guess. But you got to do some kind of sensible risk management because of the kind of risk you have up here. I think the risk of feeding cattle right now is probably the greatest it's ever been in my career. But if you get too narrow in that whole deal of never being able to buy something unless you can hedge something, you won't participate in our market. This is no place for everyone. This is the highest risk deal here, probably in agriculture. So I think you're better off with a little more of a broad base. Let's keep some, almost like buying liability insurance type thing underneath you, and then trying to manage your risk past that. But if anybody says it's easy, they have not done it, or they're lying to you.
Yeah. All right. Our other question for this week also comes from a listener, and this one is kind of a tangent to what we talked about. And it goes back to, we've talked about this before. At some point, you're going to decide to retain heifers and build back this cow herd. How can you have confidence the market is going to be strong enough, deferred long term, in order to support that purchase today?
It's a fair question, and I apologize if my answer sounds still a little bit cryptic. You can't have total confidence, and nor can I have confidence that buying a 850-pound steer for fall delivery that's going to break even $10 above the market makes sense either. I think is this, when people start asking me, shouldn't I usually go to, well, what do you usually do? What is your market plan? If you've got 200 cows, are you saving 40 heifers every year so that you can keep your cow herd at 200? Well, then that's what you're doing. That's what you should keep doing. I worry about people that deviate from a long-term plan because they think this year they've outsmarted the deal, or they're acting on a deal where I should have done it this way last year. So now I'm doing it this way this year, riding last year's horse in this year's race, if you know what I mean. I'd have to look at the smallest cow herd since 51. We continue to have, 2 years in a row, record cow kill. We haven't hardly held a heifer yet. We're just starting to right now. If you normally hold some heifers into the deal, I think that's what you ought to do. Somebody better, because we better have a few cowboys left out there. Otherwise, we're going to really get into a shortage type of a deal here, Chad. So I would have the confidence to dare to do it, but I'm not a cow-calf guy. I'm a feeder. And I can see just the natural progression of things here as this cow herd gets older and older and less of them. Somebody better start to save some heifers, and usually risk is equal to gain, proportionate to gain at least. So the higher the risk, the more proportion to gain. Again, buy some puts, do something sensible to make sure it isn't a wreck. But you can't be a cowboy unless you got some cows around.
Yeah, absolutely. So again, thank you for those listener questions. If you have a question based on this week's conversation, be sure and submit that in the comments below, and we'll talk about them next week. And again, while you're down there, go ahead and click that notifications button. That'll let you know when more of these cattle call programs come out, so you don't miss any of our conversations. As we kind of wrap up, Brad, earlier you said we're feeling a change here. So just your thoughts on the psychology of the markets this week, and maybe being pushed around a little bit by some outside influences. What do you think?
I think I should apologize. I think I sounded terrible preachy today. I'm sorry if I did. The market, there's a fine line in the mentality of a futures trader. Okay, you got the funds that are record long in the feeders, huge long in the fats. Sometimes you need to think a little bit like a long speculator. The exchange, in my opinion, hasn't done anything to benefit the long speculator with all the rule changes they've made over the last 20 years. But we need them. I mean, if you don't think we don't need the funds, you're badly mistaken, in my opinion. So, does a long speculator look at the geopolitical events, the uncertainty, the what ifs? What if this escalates? What if you have something else? Maybe that even, heaven forbid, would happen here on our borders. All that stuff in the market creates a little bit of uncertainty. So that's part of our futures problem. The cash thing, like I kind of hinted at earlier, if you're afraid it's going to be lower next week, you have a tendency to be an easier seller this week. So I don't want to freak anybody out, but I also want to say, use your head here, guys. These are monster prices. Cattle are really profitable here. Let's tuck it in here and let's keep the ball on the ground for a minute and be just a little bit more careful.
All right. So we've got a holiday coming up next week, so could have some reduced kills and things like that. So there are definitely some things coming up in the markets to be aware of. We will continue with this conversation next week. In the meantime, Brad, if folks would like to reach out and maybe talk about some of these things that we've hit on this week, how can they do that?
Our phone number is 712-722-0023, kkvtrading.com. You can take a look at who we are there too, but give us a call. That's the best way to talk about stuff, is to talk about it.
And that's it. It's just so important to talk through some of these concepts. Brad, it's good to have you. Thank you again. Appreciate that. Brad Kooima and Kooima Varilek there in Sioux Center, Iowa, on this week's Cattle Call. This week's Cattle Call, again, brought to you by Wolf Auto, Small Town Strong. Look forward to seeing you again next week on Cattle Call. I'm Chad Moy.